Hello, everybody. Welcome back to another episode of Basis Points. This is the first episode in the history of this podcast that Steve and I are doing by ourselves, and I am very excited for it because usually we have a guest, and we will continue to have a guest in the future. But he also wanted to just try me and Steve vibing back and forth about the global capital equity markets. Steve, how are you doing today?
You know, interesting morning, and we didn't get to talk this morning.
We didn't.
Guess what happened to me?
What happened today?
So I get to the office.
Okay.
I pull up, park, as you know where my parking spot is.
Yep.
Put my coffee on the roof, go into the back seat to get the backpack with all my computers in it, close the door, my coffee falls from the roof onto me. And now I'm thinking, okay, I got two options right now. And there's only one store that I know without a doubt will have the size shirt that I need because I have shorter arms with a thicker upper body. So I need a very specific size that most places don't carry. So I'm either walking all the way up to Fifth and 54th or something like that, or I'm driving home.
Yeah.
And I've already went over the bridge. And I elected to drive home. If I go home, I can make a proper breakfast, get ready. So I just did that and then just drove here.
It always sucks when you're ready to do something, you're going somewhere, then you realize, like I've done this before where I forgot the key to go to a place and you have to go all the way back to that's not fun.
The worst part is I started emptying out my office and all my spare shirts were the first thing that I took home because I had them in my closet in my office.
You know what this feeling reminds me like? This feeling of regret, this feeling of opportunity cost.
Geez.
Have you seen Allbirds today?
No.
Have you seen Allbirds?
What is Allbirds?
Allbirds. Oh, you haven't heard this story.
No.
Okay.
What the hell is Allbirds?
This stock went public in 2021 via SPAC. It's a footwear company.
Mm-hmm.
You're going to hate when I say this. They liquidated everything today. They raised $50 million in convertible notes. They're buying GPUs, and a shoewear company has now become an AI data center compute play.
People are going to say this is a top.
People have already saying it's a top, but it's literally, if you put 100 grand in it today, you're up 800 grand. Generational wealth in 2 hours. It's the beauty of the stock market, but it's also like footwear is turning into GPU, AI compute. What are we doing here? In fact, Nike, I think, should consider.
Did you see Tim Cook just bought more shares?
I did. He's buying more shares.
His first buy didn't go so good.
It's funny that Nike is actually almost as expensive as Apple, which is kind of hilarious. But the fact that Nike could liquidate their shoe brand and become a GPU brand and become just GPU it instead of just do it, and they would get a multiple.
Did you just make that up on the fly?
I might have
GPU
made that up on the fly. I might have.
That's not bad. GPU it. You should freaking coin that. You should absolutely trademark it.
I think this gets us into our first topic around what's happening with the Iran war. So the only reason an Allbirds can go up 600% in a day, even though it's a part of this sort of AI momentum craze, is because we don't have a massive level of fear around the war, around Iran, around oil. Oil hit a low today at $90. So let's get into that conversation because that's, I think, the first big topic to get into for why we're seeing this momentum. Negotiations failed on Saturday with Vance. Then he came out a day later, yesterday, and said, or 2 days ago, and said, actually, the negotiations aren't that bad. And, we wanted the Iranians to ban their nuclear enrichment for 20 years. They came back with 5 years, which is way different, 20 versus 5, than I hate you, we're never going to talk again. So oil's down. S&P has had the best 11-day stretch since 2009 in terms of the NASDAQ. You think we're back?
Feels like we're back. The question is, what happens when we actually have a deal and oil goes back to 75 if this is where we are today? And it goes to show time in the market instead of panicking usually works out way better. There is so much fear, and I get it. People feel as if there is a down market still because companies like Robinhood or Palantir or Microsoft are still in bear markets from peak to trough.
Yeah.
But was this really as bad as the pandemic? Was this really as bad as Russia-Ukraine? When you really look at it, the S&P didn't even make it down 10%, if I'm not mistaken. And you get to a situation where there's so much fear in the market, and then you and I are sitting there, well, this is a great time to buy. Because ultimately, when you zoom out, is this going to stay for a year or two? It could, but the likelihood is improbable that it's going to stay for a year or two. And of course, the U.S. is just going to block the strait. Maybe they should have done that from the beginning.
Yeah, maybe the blockade might have been.
Maybe they should have just held that as the first thing and used the strikes as the second and reversed it. But either way, we're here now. And you have to think a deal's getting done before Memorial Day, like I said.
But this wasn't a similar buy the dip of last year. So I did a poll in my chat in the morning. It was 33, 33, 33. 33% of people said I bought heavy. 33% I bought, but not heavy. And then 33% said I have not bought. Last year, if I did this around April, it would have been like 95.5 because everyone just bought the tariff dip. Why do you think, and do you think there was some legitimacy behind people being a bit more conservative this time when we got the dip?
You can't unwind a missile. Like the reality is that we blew up infrastructure.
Yeah. Oil infrastructure, which matters a lot more than tariff stuff.
Yeah,
right?
you can have negotiations and fix tariffs in a couple of hours or a couple of days. The ramifications of blowing up energy infrastructure is very severe because you get to a point where what's the timeline on rebuilding and bringing that back to market? And everybody was freaking out because if we take 4 million barrels a day off the market
Yeah.
from Iranian crude, you're going to get into a situation where demand outstrips supply really quickly. And that could definitely cause oil to go to 150, 200 plus. I think that's what people were afraid of because a lot of people have this idea that President Trump is a psycho.
Right. And when he says I'm going to blow up civilizations, it doesn't help in terms of their perception of him. But psychoanalytically, this is what he likes to do. He likes to ratchet things up, get you super excited, and then every single time, he really doesn't go all the way. And I guess call it art of the deal, whatever you want. But if you bought the dip at all over the past couple of weeks, assuming that Trump's not going to start World War III, I mean, it's paying off.
What makes me crazy, people want to get bearish on companies that are generating $100 billion plus in cash from operations.
Yeah.
As if a couple of months of volatility is going to change that. I'm sorry, corporations are not getting rid of AWS, Azure, or Google Cloud. It's just not happening.
Okay, so that gets us into the discussion then about the bull. Well, actually, before we get into that discussion, I want to talk more about just real quick Trump's shift to being focused on the economy. So the White House did this stunt with a DoorDash driver, a DoorDash grandma, and before Trump answered questions about the Iran war and the blockade 2 days ago, he gave the DoorDash driver a tip, and the whole idea was the big beautiful bill is giving you no tax on tips, and so he basically interviewed her about how amazing it is that they have no tax on tips. A lot of people had a political opinion about this, but I thought the real takeaway that no one was talking about, and I wonder if you agree, is that for the past month and a half, all we've heard from Trump is, I'm going to blow up the world. Iran's horrible. Like, we need to stop them from getting a nuke. This was the first time in a month and a half that he actually did a stunt, like a legit PR stunt, where they focused on the economy. And to me, it was a shift of like, look, I see the midterms are coming up. I think the war is going to come to an end. What do people love me for? Cheap oil, low inflation, good labor market, good stock market. If I can get people to going back to that mindset, given tax day is coming up, tax day is today, and people can remember how much of a refund they're getting, 11% higher than average because of the big beautiful bill, then maybe my shift is now on the economy, not the war. And from a market perspective, I would imagine the market probably really likes that.
So 2 things he can't claim yet. And I just filled up my tank the other day and I was paying $2.98 maybe 5 weeks ago. I think I just paid $4.01 per gallon. That's a significant jump. I'm sure in California, it's much different than when we were out there a couple of weeks ago. I remember seeing $6.80 a gallon out there. I'm sure it's closer to $8 right now.
Yeah.
But can't claim that. And you need to be able to claim it. There's 2 big dates that are coming up, Memorial Day and July 4th. You need energy prices down for that. You need food prices down for that. Those are 2 huge holidays for cookouts. You can't win midterms with people having a bad image of the economy. You just can't. You can't win elections like that. And I think that people need to stop being so political. I don't care how people vote. I don't care what their beliefs are. Everybody's entitled to their own opinion. But I think we are so much team A, team B right now that we can't look at things on an individual basis. Does the new tax code work better for you or your family? I think that that's what should be assessed right now.
Right.
And did you get more money back or did you pay more?
Right.
I bet you more people are getting more money back this year than they did the prior year.
That's all that matters going into November. Because people have a very quick memory. And it would be very easy for the opposition party to blame Trump for the war and all these issues if things were really bad come November. But if things are good, and then Trump could be like, not only is inflation down, oil's down, stock market's up, and I'm saving you from World War III, from a nuclear Iran, that's a hell of a pitch that he could sell going into November.
And look, they're going to meet in the middle. Supposedly we wanted 20 years. They offered 5. They'll figure it out, 10, 12 years.
Yeah.
And then negotiate again 2 presidents from now. So am I really that worried? No. I alluded to we're probably forming a bottom, but I wasn't willing to call a bottom like I was last time around.
But we were on stream and I said, Steve, gun to your head, and we bottomed or not? And you were like, yeah, we bought it. And most people are like,
gun to my head, yes, we bottomed when I said it, but I wasn't willing I'm not going to take credit for it because it's one of those things. And I said, this can go either way. You know, when you have the military involved, not just negotiations between delegates, it's two completely different situations. But I did think the worst was behind us, and it looks like that's playing out. And have you noticed I haven't pulled my 8,000 target for S&P?
The average on the street is 7,700, so you are well above what the street
Do you
is.
know where Q1 earnings for tech is supposed to come in?
I don't. Do you have the exact number?
45% year-over-year increase.
Really?
I thought it was crazy. I triple checked it. All the sources I looked at all say the same thing.
So that's not S&P 500. That's tech.
Tech.
Okay.
Tech. S&P is like 12.8.
12 point something. Yeah.
Tech is 45%. 43 or 45%. It was over 40%. And you can see it in the fact set thing. That was one of the places that I looked. It's wild.
Okay, so that gets us into the next conversation here. The bull market might be back, and we're going to analyze a couple different areas in which the bull market is coming back from. The first one is the 7 companies that have been leading this bull market for the past 4 years. Mag 7.
Mag 7.
Not the lag 7 anymore.
Should they have ever been the lag 7?
I mean, they shouldn't have, but when Microsoft was in a bear market, NVIDIA was at 160. NVIDIA, 199.48.
Oh, hold on. NVIDIA did not get to 160.
163.
It got that low?
Yeah.
I thought I caught
we
the
actually,
bottom.
on the stream today, we calculated all the percentage gains of all the Mag 7.
That had to have been intraday.
Yeah.
Okay, intraday.
It didn't close at 163. Meta and Amazon gave you your best returns at above 22%. NVIDIA's like at 18. And then Microsoft is at like, I think 20% on the dot. So here's the question. When the Mag 7 were falling the way they were falling over the past 2 months, what did you buy and how did you interpret a potential rebound if this war were to come to an end?
I mean, you were standing right next to me when I said, should I post this or not? So you know exactly what I bought when we were in California.
I bought NVIDIA with you as well.
I mean, we both bought NVIDIA under 170.
Yep.
And I bought NVIDIA 172.50 and 167.50. I bought some more Microsoft.
Shout out to our boy Matt Money. He made a nice move on Microsoft. I think he bought 200 shares at 370. So,
you know, there's a reason his name is Real Matt Money.
There's a reason his name is Real Matt Money.
Real reason.
Dropped a nice 70K on Microsoft. He's going to be up on that over the next
100%.
decade in a substantial way. It's freaking Microsoft.
It's Microsoft. I have a whole riff on that. But when you look at the Mag 7, these are the best companies in the world. These are not companies getting displaced or replaced. You cannot vibe code away $100 billion in cash flow. You cannot vibe code away these balance sheets. These companies are the ones dictating it. And if vibe coding really is a threat to companies, you have to have Microsoft, Amazon, and Alphabet in the conversation, because where do you think everything is running? It's running on their infrastructure. Without their infrastructure, none of this matters. So the idea that we're going to get away from ordering packages, it was just one of the craziest things. And you also think about network effects with Meta, and maybe I know something about Meta. I've been a shareholder. I should say we've been a shareholder. I cannot take credit. The shadow government wanted to buy more than we did at 19, still have it. I may have written. Did you see tip ranks, by the way?
I didn't. What's happening?
I got an alert. I don't know why they sent it, but I got an alert. So it was probably because I'm following a couple companies on there. Like, oh, let me just see. You know, I'm ranked number 3 now.
Wow.
In financial bloggers.
There's
How
like
crazy is that?
30,000 of them, right?
Something like, and then 17 in experts.
Wow.
At some point, this is going to change. I keep saying it. I've been saying it for like a year. I feel like I sound like Zuckerberg, where he's like, our growth is going to stop at some point. Like at some point, I'm going to be 1,000 again. But when it comes to Meta, I think a lot of people forgot about the fact that 3.5 billion people touch their systems from Instagram, Facebook, WhatsApp, Threads. 3.5 billion people. Can you go and vibe code an interface? Absolutely. Probably do it in a couple hours, maybe a couple days, depending on how intricate you want to get. You can't vibe code almost half of the global population utilizing it. And then you think about YouTube too. It's the same thing. Everybody that puts up a picture, everybody that puts up a video, everybody that puts up a reel or story, that is all the engaging content, and people stay in those ecosystems because that's where all the engagement happens. That's where their community is. So are we really going to see another product come along that really competes? Maybe, but I think it's improbable.
The interesting thing about Meta is that they got to 740 after earnings last time. They fell down as the market started falling down, but they fell to 520 because of a child bullying lawsuit, which people can have their own thoughts on. But if everyone's allowed to sue Facebook because they're getting bullied on it, Facebook can't survive, and most companies can't survive at that point. So that was bad sentiment, along with the Iran war. They're back at 670 today because not only did they put out a new model that's number 2 on the App Store, but I think the street realized Zucks is not messing around spending $150 billion on CapEx.
Oh, you know what else they realized? Zuck is probably so pissed right now that he moved his desk down to the floor in the AI unit. He's no longer in the penthouse. Do you really want to get bearish on a Zuckerberg that is now laser focused? He's done waterboarding or freaking with jet skiing, whatever the hell he's doing on the back of the boat, wakeboarding. But I mean, do you really want to go against him and bet against this guy? He's one of the only people that built $1 trillion company and built it from his dorm room. Is that somebody we're going to bet against?
I would not. And that's why I think Meta was such a great dip buy. And when you think of the level of momentum and moats these companies have, I think that's kind of the core focus here, is that a Microsoft, a Meta, an Amazon, a Google, for them to fall to these levels, it happens because it's a stock market. But the idea that they would stay there, people that actually got straight bearish, like these companies don't, like the Michael Burrys of the world who have puts on NVIDIA for 100 by the end of next year. It's concerning. It's concerning to think that people doubt these companies at these levels. But that's also good because it means there's a wall of worry. So when they beat earnings again, they're probably going to all-time highs.
The good thing is everybody who puts into a 401k or a 403b or a SEMP or an IRA, whatever it may be, if you're putting in every 2 weeks and regardless if you're buying a target date fund, a total index fund, an S&P fund, this gave you an opportunity to buy shares of an index at cheaper prices and get more exposure to the greatest companies. And I don't know a single person who sold off their retirement accounts. Matt and I were talking about this last night on stream. Did anybody stop contributing to their retirement accounts? Did anybody sell it off and go to cash? No. And if you did, are you really good enough to get back in at the right time before Trump posts something? I think not.
I had to talk a friend off the edge when he called me the night of the JD Vance thing, the negotiation. He was like, I think I'm going to liquidate everything. This guy's heavy in Palantir. He knows who owns it. He's heavier in Palantir, an $11 average. He's held on for all these years. Like, I just think I'm going to sell it. I was like, dude, we're going to be okay. These companies are growing. We just got to get through this macro headwind. What did you think about Amazon, which went to 198, broke 250 yesterday? I know this is something that you really like a lot. Is this one of your favorite Max 7s at the moment?
It is. I'm actually looking at the valuations right now live, and I'm going to answer your question in a sec. NVIDIA and Meta are still cheap. So right now, as of right now, NVIDIA is at 198.31. This year's earnings, 23.9 times a trade.
That's not euphoria.
That's not euphoria, everyone. Euphoria. How about this? Next year's earnings, 17.9 times, and 2028, 15.5 times. That's not euphoria. Not for a company that's expected to grow their earnings by 53% over the next 2 years. I mean, it's just not. Then you have Meta trading at 16.8 times 2028 and 22.7 times this year. And then let's get to Amazon. 32 times this year, 21 times 2028, 52% EPS growth over the next 2 years. And the thing about Amazon is they should be one of the largest beneficiaries of AI. They are now profitable on the international level on e-commerce.
Yeah.
They're very profitable in North America on it. They keep adding all these different layers and vectors to monetize. They're now the 3rd largest advertising platform in the world, I believe, behind Meta and Google. So we really going to get bearish on the company that I see more trucks in New York City than FedEx, USPS, and UPS combined? Throw DHL in there also. I haven't seen DHL truck in God knows how long. But I mean, are we really going to get bearish on a company where in my building I only see Amazon boxes?
They just acquired GSAT, or they're trying to. The deal hasn't gone through yet. That's going to get them more into the satellite space world. I mean, they have tentacles everywhere.
Look at what Jassy said about chips.
Yeah, well, that was the big thing. So that shareholder letter, they're on a $20 billion annual run rate. I didn't know that. I didn't know they were selling that many Trainium chips. And he said if it was an independent business, it would be $50 billion.
T3 is fully subscribed.
Yeah.
it's T4. They're already getting it. It's not even built yet. So
Well, we also didn't talk about the elephant in the room. The other reason people are buying Amazon, they have a 15% stake in the most important private company on the planet.
how about they have a stake in both OpenAI and Anthropic?
Yeah.
So it's an indirect play on those companies, in addition to buying one of the greatest businesses. And if you put it up, and I made a dedicated video that you saw and we talked about it, you put them up against Costco and Walmart. Why are we paying much bigger valuations for Costco and Walmart compared to Amazon? And the whole idea that it's recession proof, stability, all this stuff. I got news for everybody. You buy the same stuff on Amazon, same thing, and you don't have to drive anywhere. You don't have to waste your time. You don't have to spend the money on gas. You don't have to fight anybody in the aisles at Costco. And when I mean fight, like move around people,
Yeah.
it's annoying. Amazon, do it from your phone, come right to your home. Oh, and they have AWS, something that those companies don't have.
You know, that's your
So-
phrase, right? I got news for everybody.
Yeah, well, it's one of them. But
it's like
look
when
at-
Steve says I got news for everybody, you know he's about to hit you with a bar.
But think about this. SG&A is $168 billion. Amazon has already created a situation in their warehouses where their factory, let's call it factory/warehouse, is really robotics right now. Huge robotics. And then when we start getting to humanoid robots, I really do believe they can get rid of 20 to 30 billion of SG&A costs. That drops right to the bottom line. And then,
and that increases margins
right.
and then free cash flow.
So
as a result.
2028 is the year the analysts are believing it's going to hit 1 trillion revenue. First $1 trillion revenue company. If that happens, their margins are just under 12% right now. If through robotics and AI automation for platforms and back-end stuff, if they can get to 15 to 20% margin, that's 150 to 200 billion of
Yeah.
operating income.
Yeah.
W-
And it's
Nobody's putting up 200 billion, and Amazon's under a 3 trillion market cap. You can't tell me this isn't going higher.
so how do you fight back against the argument that their free cash flow is negative for this?
Who cares? Who cares? Is that causing Amazon not to make investments? Can anybody compete with Amazon other than Microsoft or Alphabet? Can you and I go raise capital and go try to compete with them? We'd be crazy.
No.
I mean, I don't care about them investing in themselves for the right reasons because I'm willing to deal with the naysayers for a year or two. If you're a short-term trader, that's a short-term mindset. Long-term, you don't care about those things. You tell me they're not going to figure it out. They became a $3 trillion company at one point, but they're not going to figure it out.
Would you rather buy Amazon or Microsoft here? Now that we've had the run.
That's the hard one.
I still think it's Amazon. It's just the most important company in the world. But Microsoft's valuation is better than Amazon's. It's just there are questions about Copilot and really what's their software offering. And I mean, do you have any thoughts on kind of the software element of Microsoft? Because that's kind of also why it fell with the software sell-off.
I do. The entire software stack is so sticky. I think unless you're on a side of business where you deal with Microsoft, you don't necessarily get it. And corporate structure, okay? You're an employee, you have an M365 license. Most likely you're also using OneDrive. Most likely you're also using SharePoint. Most likely your company is using Azure. You may be on Dynamics, you may not be. But the M365 licenses, very hard to get away from.
Yeah.
Most companies are not going to Google. They're just not. We left Alphabet in 2017 or 2018 and went to the Microsoft environment. We were in Microsoft prior. We went to Google. We tried it.
Was that your job?
Switching was a headache, but that's another thing. Opportunity costs, switching costs, implementation costs get crazy. We can talk about that with SaaS, but with Microsoft, there are so many verticals with it. And then you think about how layered in LinkedIn is to HR departments and how much money gets spent on LinkedIn, not just from the users getting premium to look for jobs or increase viewership or whatever, but also HR departments doing outreach for job postings. LinkedIn is a flywheel that never gets talked about. So from a software side, I think that people are crazy. You're going to get a price increase this year for M365 in July, I believe. And Copilot has a 3% penetration rate. They get that up to 10, 15%. You're talking about incremental billions of dollars in increased revenue. It's an opportunity.
But is it a compelling opportunity compared to the verticals that even a Meta or Amazon are entering?
Yes, it is.
Because of the stickiness, that's your
Yeah,
point.
it's so sticky. And we're also not talking about Xbox or anything else that they do. Windows. I mean,
LinkedIn, you know.
you think about all the different things that Microsoft has its hands in. You look, it's sold off because they didn't have a four handle on Azure and Intelligent Cloud. 39% year over year growth. Cry me a river. Like seriously, what the numbers weren't good enough on profitability and revenue?
No.
Numbers weren't good enough.
No, I agree.
So
It's funny though, because everything was down. So you took whatever Mag 7 paid. Apple's the one that really didn't get hit too hard, but even Tesla is up 20% from the lows. Like,
I think Microsoft has an alphabet moment. I think from today, Microsoft may have more alpha than Amazon in the short term.
hmm.
Long term, I think they're both incredible opportunities. And I think because of how much Amazon ran in the past 2 weeks, I think Microsoft is the one that will, if you say for the next month, which I hate making, I don't invest that way.
Yeah.
But if you're talking the next month or for a catch up trade, I think it's Microsoft here.
Before we get into SaaS and that entire sell off, the Neoclouds.
Mhm.
So we both like Oracle, around the 135
Oh, yeah,
range.
you bought it. I didn't. I'm a dumbass.
I ended up
Can
buying
we
it.
can we seriously do this? Can I just give you an account with money in it?
Dude,
I just need to do it.
I will. I mean, it's funny because Steve, a lot of times he likes a name, but he is a little bit more conservative, so it's hard to pull the trigger. But
And I feel like I convinced you to buy Oracle.
I feel like you, along with, what really convinced me, your thesis on it was very sound, but what convinced me was last Friday, Oracle was down at 135. Nebius was hitting new highs. Corey was hitting new highs, or not Corey new highs, but it was
Yeah.
breaking out from like $70 to like almost 95. And in my head, I was like, hold on, CoreWeave's backlog is 90 billion. Oracle's backlog is 500 billion. All three of these companies are diluting. All three of these companies are unprofitable. All three of these companies' free cash flow is negative. I mean, the Neoclouds, besides Oracle, have never even seen what profitability looks like because they're such new companies and they're constantly diluting. Oracle, because they have a legacy software business called NetSuite, got taken down in the IGV sell-off. So to me, it's like that software component cannot be the reason that the company with 500 billion of RPO from OpenAI, which just raised 122 billion, deserves to be down, especially when it was 170 on earnings a month ago. So I ended up buying it. I'm happy with the purchase. I'm curious, do you think the Neoclouds are one of the best AI infrastructure opportunity to invest in this market?
Yeah, I do. I mean, I own Nebius, full disclosure.
Yep.
Probably didn't buy enough. I think I bought it like 75 or
Same.
something like that
Yep.
area. I know Tanner's been loading up on it. He's been 100% correct about a lot of things regarding this side of the sector.
Yeah.
And if you think about the RPO books from Oracle, Microsoft, Amazon, and Alphabet, I believe it's I don't remember the exact number, 1.3 trillion, 1.4 trillion, something like that. So the idea that Oracle should be sold off because a majority of their RPO is from OpenAI, nobody knows if OpenAI is actually going to write the check. They already have signed purchase agreements.
Yeah.
And even if you argue that 100 billion evaporates, it's still over 400 billion in RPO. So what are we really talking
And by the way,
about?
OpenAI this is not like a food vendor at an OpenAI party that they can pick a new one. Like they need the compute, and Oracle's providing it. And it's not easy to get. Meta just gave CoreWeave another $20 billion of fresh
I'm
capital
going to give you a hot take.
because they need the compute.
If I had the choice to invest in 3 companies right now, if I had to pick one out of 3, SpaceX, OpenAI, or Anthropic, SpaceX is the last thing I'm investing in. I'm investing in Anthropic and OpenAI every day, all day, instead of SpaceX.
Okay, so we'll get into the SpaceX discussion as well in a second. But I agree with you. The Neoclouds are real. Definitely, I sold Nebius a bit way too early. I still have some left, but the run that it's had is incredible, and the people that have had conviction and held on to it, they deserve the gains. I do think Oracle is undervalued here, and the only fear I have about the Neoclouds is that the lack of profitability and dilution is a never-ending cycle. But it's almost like the AI circular funding type of concern. It's a legit concern. Like money shouldn't be moving like that. But if there's an ROI at the end, aka the Neoclouds turn into actual clouds and they make a profit because there's so much demand, then you just have to be okay with a business model that's not profitable for a while, which in the case of Oracle, it's heavily discounted already because their credit default swaps, I think, have peaked. But for Nebius and CoreWeave, 5 years down the line, if NVIDIA is a $20 trillion company, $10 trillion company, those companies are probably bigger as well.
So I know Burry's made that a similar argument. I know there's a lot of similar arguments about circular financing, but is it really circular financing? Let's think about that and let's pick it apart. So company A makes an investment in company B.
Yeah.
They write a check for $10 billion and they get equity. So they are purchasing equity from the company.
Yeah.
That is no longer their capital. They just exchange capital for equity. They have equity on their balance sheet, and now company B has cash on their balance sheet because they just diluted shareholders. What they decide to do with that cash, it is their decision to make. Whether they want to go buy apples, oranges, or GPU chips, it's their cash to make the decision. And that's the problem I have with this circular financing thing, is it's not like NVIDIA isn't getting something for that capital. They're making a strategic investment in these companies that is sitting on the balance sheet that their shareholders benefit from if those companies appreciate in value. So I think the whole circular financing thing is a ridiculous idea that the bears have. It's the only thing they can hang on to in this whole bear argument.
Yeah, and it's like at the end of the day, if Nvidia's investing money in Anthropic and Anthropic's buying more GPUs from Nvidia, but Anthropic is growing their revenues because of those GPUs, then Nvidia's equity stake grows because Anthropic's revenue grows, not
Run,
because they bought Nvidia's GPUs.
run rate of 9 billion to 30 billion in 3 months. I mean, come on.
Yeah, okay, so we will talk about Anthropic and SpaceX
Let's
in a
go
second.
SaaS.
Let's go SaaS.
Yeah.
IGV, bad drawdown last Friday. IGV now year to date. I mean, it was ugly last Friday. That's when the dips were really juicy. Still down 20%, even from this rebound from low 70s up to 82. Simple question: Salesforce, ServiceNow, are these companies dead?
No. I've been doing a lot thinking about this, and now I'm a little bit more free to talk about certain things. I'm going to give you a 1-minute spiel about why. I'm going to change my answer a little bit than what I've said in the past. Okay. And let's throw a CrowdStrike and cybersecurity in there because those also got hit. There's something called compliance. There's something called SOC 2 reports. And a lot of people have no idea what those things mean. And it's how you handle data. The big thing, like your Workdays, your SAPs, your Oracle Fusions, there is something called compliance. There are also lawsuits. And these systems are holding the most sensitive data of your organization. That most sensitive data may not be trade secrets.
Yeah.
It is your payroll, it is your social security numbers, it is your addresses, it's all of your identifying marks, your structure of how you secure data, how your cybersecurity touches all the endpoints is huge. Most people that are making these arguments have no idea what any of that means, what I just said. And the reality is when you go through an RFP or when you have auditors come in, companies get IT audits.
Yeah.
I mean,
That happens.
public companies go through these audits. Private companies go through these audits. I have worked in the industry. I run the RFPs. I've negotiated the deals. I have dealt with compliance and legal firsthand. I know what all this stuff goes on. I've had to deal with the auditors and round up all the SOC 2 reports and have our IT vendor sign off on everything, do the third-party assessments. Vibe coding a platform to streamline things, I agree with. Okay. I think that the single point SaaS companies are going to have a very difficult time. You start talking about enterprise grade, there is not a CEO, a CFO, a compliance department, or a general counsel that is going to green light making a switch from something that Timmy and Johnny in IT vibe coded over a weekend that's going to house payroll data. And let's talk about even companies like NextGen or Epic for the hospital systems. That's SaaS. So you're going to put all your patient data from your doctor's appointments in a vibe coded thing that's untested, doesn't have structure around compliance, doesn't have security around it. It's not happening. So the whole SaaS apocalypse has been so overblown, and it's warranted in many areas. Tax software, bookkeeping software, I can buy that argument. I can absolutely buy it. Enterprise grade, where you look at the lawsuits in the courts, wage and hour is one of the largest lawsuits.
Yeah.
And every state has different tax filing rules. So when you start talking about running payroll, and a lot of people, they don't see this because if they do work at a very large company, there's only a very small amount of people that actually run these types of RFPs and are involved in the decision-making process. So a lot of these people that, and this is why I go crazy on X about this, because the people making these arguments are not exposed to anything I just said.
Well, I agree with you. The pushback here is that the future growth potential of these companies is going to be commoditized, given and Anthropic went from 1 billion to 30 billion in 15 months. So even if the stickiness of their business models persist, Salesforce will never grow 20, 30% again. So why should I buy Salesforce stock?
And that's a valid argument. They probably won't. But do they need to? Because right now, they're not a growth company. They're a deep value play. If you look at the balance sheet, I don't even have it up in front of me. I could tell you what it says because I looked at it yesterday on the stream. They got $9.5 billion in cash. They got another $7.5 billion in long-term investments. They have about $10.5 billion in long-term debt. So they're almost at a one-to-one level with debt as cash on hand. Their free cash flow is $14.5 billion a year. You're going to get bearish on a company that buys back $12.5 billion worth of shares. It's paying out $1.5 billion in dividends, all funded by free cash flow that's growing revenue from 8 to 11% a year. Now, it may not be an Amazon opportunity, but it certainly should not be trading like a tobacco company.
But in this AI revolution, essentially what I'm hearing from you is it might not go up like crazy, but it shouldn't be going down like crazy.
Correct.
And there's a nuance there because you're going to get a cohort of investors that will just never touch it because they don't see the growth. But you're saying the people that own it shouldn't be getting rid of it as aggressively.
Look, if you have a better opportunity somewhere else, I think that this is a capitalist society and everybody should monetize that. But the problem is at some point, you look at where Salesforce is trading right now, it is trading the way tobacco companies trade.
Yeah.
And I think that it is trading at such a deep valuation that it's interesting. I don't think it should have went down this low. And we don't know what the future holds, but the likelihood that they're really going to be that impacted when Benioff has put out the roadmap to 2030 and he's showing you how much growth they're going to have. I mean, it's hard for me to get bearish that this is going to zero, as Matt says. So I like Salesforce here. I don't think it's getting vibe coded away, and I think they're going to monetize agents. You look at the data 360 they have. You look at their agent force. It's growing. I can't wait for their next earnings report.
I don't think you can vibe code Salesforce away. I don't think you can vibe code ServiceNow and Adobe away. There is a company I definitely don't think is easily going to be at vibe coded away either, and that's good old Palantir.
Mr. Karp or
Mr.
Dr. Karp.
Dr. Karp.
Dr.
Gotta
Karp.
put some respect on that name.
Listen, I apologize. Dr. Karp. I'm now bullish Palantir again, by the way.
So I just want to say, I bought the damn dip. And
yes, you did.
You and I are OGs. We've covered this company since $6.
By the way, Salesforce 13.5 times this year's earnings, 10 times 2028 earnings. 10 times.
To that point, I bought Palantir at 300 times next year's earnings.
Right.
Or some number like that. But the reason I bought the dip on it, 129, 128, is because after the amount of years of covering this company, at some point you either believe in it or you don't. And when you have made as many videos, articles, how many times we've talked about it publicly, you don't get that many opportunities in it either.
I know.
This one gave us a real opportunity again.
I no longer think it's going under 100.
Okay, explain.
Everybody knows that I was extremely bullish. You and I are 2 out of maybe 15 people that were extremely bullish day one. Yep. And that bandwagon has grown exponentially over the years, but we were in it in 2020, 2021, late 2020, early 2020. My first article was January 2021, right after their first quarter earnings, because I waited to get the actual data from earnings, not just going off the S1. Now, when it really started shooting up, I was like, this is kind of crazy, the valuation, et cetera, et cetera. And I was telling people on your channel, 180 and 200, I don't think there's any way this holds it. It didn't. It got caught up, maybe for the wrong reasons it got caught up. But at the valuation it's at now and going off the business metrics, this is one of the best companies I've ever seen. I don't have the numbers in front of me. I put out yesterday. I think they did 680 deals of $1 million or more in 2025. And there was something like 200 and some odd deals that were over 5 million and over 100 deals that were over 10 million. And their revenue growth has accelerated for the past 10 or 12 quarters year over year. And they're now expected to do 73% year over year. The valuation is still expensive, but
compared to every other SaaS name. Yeah.
But if Walmart and Costco are trading where they're trading today in the 40s on PE, and Palantir is expected to go from around 100 times this year to 50 times 2028, and they have a history of beat and raises, is it really that expensive anymore? Especially given the geopolitical landscape, given Golden Dome, given everything that we need. And the most important thing, if the military industrial complex gets their way and we get a $1.4 trillion defense budget in 2027, what does that mean for Palantir?
It means that there's a lot more demand from the government side, which is incredibly sticky revenue and high margin revenue. Yeah, like Golden Dome, every catalyst you could imagine for this company has come to fruition over the past couple of years. But the most interesting thing about them, and the reason that I think it was opportunistic to be excited when they went lower, is because the sentiment on SaaS is that they're being commoditized by AI. Palantir is one of the only SaaS companies, literally one of the only ones, that's growing at 70% with 51% adjusted operating margins, accelerating the rate of growth on the margin profile and on the top line in the age of AI. Which, what does that mean? The takeaway is they are using AI to turbocharge their revenues. They're using AI to orchestrate the ability for LLMs to be incorporated. If you want to think Claude and OpenAI are just going to destroy that entire intermediation layer, be my guest. But there's a reason why Palantir is doing the numbers that it's doing. And I don't think that's going to stop. I mean, the street's expecting them to grow 80%. The only other tech companies in AI that are growing 80% are NVIDIA.
And think about this. Operating income, 40.9% margin in Q4. Net income, okay, 1.2 billion gross profit at 84.6%. Their net, 609 million, 43.3% in Q4. This is one of the most high margin businesses I've ever seen. And their growth is exponential, especially if the military industrial complex gets their way.
Which, look, whether people agree or disagree with the military industrial complex, the Iran war, hopefully it comes to an end, has proven to everyone we are going to live in a much unsafe world that is going to be more geopolitically violent over the next, I would say, at least 100 years.
Yeah, it's nothing political. It's just numbers. If you have 1.4 trillion being spent instead of 900 billion, that's extra 500 billion flowing into this sector. There are a handful of companies that are going to do better. Potentially Palantir, potentially Lockheed Martin, potentially Raytheon, potentially Northrop Grumman. So it's nothing political. It's just math.
It's just math. And if there's more revenue coming in, then Palantir obviously is probably going to have a better chance to get more momentum. Yeah, I think the conclusion to the SaaS sell-off is that the funniest thing is there's a guy who gave Anthropic $50,000 and told Claude to trade for him. And the first two stocks that his portfolio bought were Adobe and Salesforce, or ServiceNow. So SaaS is probably not dead. I think you have to be selective. Definitely the cybersecurity names I think are not dead. But the most high quality companies are going to continue to be the most high quality companies. Last topic for today, private companies going public. I don't want to say it because I know you're going to go off, but we got to talk about it. SpaceX, $2 trillion. Will you be participating in this IPO?
No.
Why? Why don't you like the future of data centers in space and Elon? I don't understand why you're so bearish. You're just a hater, quite frankly. You just drink your milk and don't want to, participate.
As long as it's not skim milk and it's whole, yes, I will drink a gallon. We're all good there. But it doesn't matter. You can give me skim milk, whole milk. I don't care. Chocolate milk. I'm still not buying it. Here's why. If it was valued reasonably, sure. And I know I watched a lot of podcasts that made really good analogies and had great things to say about potential. I will never bet against Elon, okay? This is a guy who went to war with Ford and General Motors and won, okay? This is a guy who went in underfunded. Everybody said he was crazy. Who would actually go start up an electric vehicle company when EVs, the only thing at the time was a Nissan Leaf? You don't bet against somebody like that. Also, running all these companies that he does, I don't know, he must have the founder youth somewhere because the guy doesn't need sleep and can manage everything. So won't bet against him. But let's call a spade a spade. 16 billion revenue on a good day.
It's actually 18.5. That's the latest.
Didn't they say 15 to 16 billion?
No, 18.5 is the official number. So it's 18.5 and they're losing 5 billion because of the XAI acquisition.
Okay.
So they're not profitable.
So how about this? I'm going to give them 20 billion revenue and 10 billion EBITDA. Okay. 50% margin. You can 10x the revenue and 10x the EBITDA. They're not generating what Meta Platforms generates today, and Meta is growing double digits on both.
No.
Okay, so how much forward growth is built in?
But their TAM is bigger, is the pushback.
Can you prove it? Can anybody prove it?
Space is pretty big.
Space is pretty big, but when are we going to have data centers up there? 1 year, 5 years, 20 years? I don't know. Like, what is the actual alpha there? I don't know. I'm not saying it's not going to happen, but a $2 trillion valuation seems so rich to me when Amazon was stuck around 2.2 for a while. Meta has been stuck at 1.4 to 1.6. Meta's doing over 200 billion revenue. They're doing over 100 billion in cash flow and EBITDA. So they're still growing. Why? And I get it. Elon, SpaceX, I get it. Cool story. I'm not saying it's not going to work out. I'm just saying if this was a 500 billion IPO, yeah, I'd probably buy it. 750, maybe. But think about the companies that are $750 billion.
Well, the thing is, their market cap has been evolving in the private markets for so long that the insiders that took a chance on SpaceX when it was worth nothing need liquidity. And Elon knows that, which is why they're allocating 30% of the shares for retail. The problem is, like, when you're buying, people are like, oh, well, Palantir's expensive, Rocket Lab's expensive. It's like, yeah, but they didn't go IPO at 2 trillion. Palantir IPO'd at 20 billion. So there is alpha there. The question is, can SpaceX legitimately get to 4 or 5 trillion? Eventually, yeah, but if it's not happening anytime soon, the opportunity cost of your capital, even though it's an amazing idea, it's aggressive.
How many times have we heard FSD and Cybercap? When were Cybercap supposed to be out?
A while ago.
24?
No.
Okay. What's Tesla's revenue done for the past 3 years?
Nothing.
Gone down. What's their profitability done? Gone from about, 12.5 billion or so to 3.9 billion?
Yeah.
So, stagnant company. I don't know. Is SpaceX going to work? Maybe. But for me, I feel better investing in the Mag 7 than SpaceX or Spectacular 6X Tesla. I think Tesla's biggest thing is Optimus. That will be the biggest company in the world.
I'm invested in 2 private humanoid robotic companies. I think humanoid robots are far. Elon seems more interested in getting it into your house versus getting it into a warehouse, which to me feels like the wrong play.
Yeah.
Like, because he keeps talking about it from that, but it's like they're not there yet. If these LMs are still hallucinating, we think a robot's going to be able to do the dishes. Like, it's a good story, but it is far, far from reality.
Well, I will make Elon a promise. I'm buying 2. Okay. Do you know what movie that's from? Utah, Give Me 2?
Of course.
Okay.
It's a classic.
Sure. It is a classic. But
Godfather?
No.
Interstellar?
No.
Inception?
Point Break.
I've never heard of that film. Who the hell's
Gary Busey, Tom Cruise. Utah, Give Me 2. No?
Who's Gary
Nothing?
Busey?
You did not just say that. Wow. Oh my God.
I know who Keanu Reeves is. Patrick Swayze. I think I've heard of
everybody. You just said you think you've heard of Patrick Swayze?
I think so.
Oh my God. Anyway, Elon, I will buy 2 Optimus bots. One for my parents, one for us. I think they're going to be that important. And from a industrial application, I think people are discounting how much they will be used in healthcare. I think, and look, I see it because of patient handling claims. The amount of workman's comp claims for patient handling is immense. The amount of claims for strains, immense. Humanoid robotics will be huge in healthcare when they come to market, the same way they're going to be huge in warehouses, because not only are there not going to be workman's comp claims for it, they now don't leave after an 8-hour shift and you just plug them in. They don't need days off, et cetera, et cetera.
Right.
And it's more efficient. So I actually think you put a gun to my head, do I want to buy Tesla or SpaceX? I want to buy Tesla because the application for humanoid robots is way bigger than whatever SpaceX is going to do.
Last thing we'll talk about real quick, Anthropic. They went from $1 billion to 30 billion in 15 months, 19 billion to 30 billion in 1 month. You and I don't have any like actual private exposure to it, but I think the takeaway from it is that AI is real because you need those 1 or 2 companies, just like the YouTubes and the Facebooks of the world that validated the internet. It seems like Anthropic is validating AI and it's forcing OpenAI to shift their strategy to focus on what Anthropic's doing to really prove that exponential growth is possible.
Anthropic is the greatest company, in my opinion, that you can invest in that's not public.
Yeah.
Followed by probably OpenAI and Andrew.
I agree. I had a friend, Triple V, he tried to get into Anthropic. His dealer said, hey, are you interested? $1 million minimum.
His dealer.
You have these prime dealers at these banks.
I know.
Like, hey,
the way you said it, you made it sound like something that
these guys basically are drug dealers, dude. They have the drugs, the private markets, they're the intermediaries. Yeah. But he waited a day to respond to him. He asked me, what do I think? I was like, dude, go for it. 380 billion. I feel like it's a steal. And Anthropic wasn't growing like it's growing now. He waited a day to respond. The guy said, sorry, man, it was taken in 30 minutes.
I'm not surprised.
Like, this is the most exciting company. And yeah, they're probably going to take away a lot of SaaS momentum, but if they become a underlying infrastructure for SaaS to grow, and you've got the ability for them to evolve in the different use cases around consumer, healthcare, et cetera, you're talking about a company that's getting ready to do close to $100 billion in revenue by the end of this year. That's more than most SaaS companies combined.
You saw what I built.
Yeah. So can you talk about that? Let's end it off. You've been vibe coding. How has that been as an experience?
I've never taken a coding class. I've never taken a computer science class. I've never coded one line of code. What I built, do you think it looks good?
No, it's pretty damn incredible. For someone who has never touched a computer that requires putting scripts in to command something to happen, your ability to talk to Claude and for it to create that and then reason with it and say, I don't want this, I want this, I want that. It's a game changer.
Even Katie thought it was impressive.
Yeah, Katie Stockton, she was here. Yeah.
And what I continue to refine it into, and I'm not going to give away how I did it or what exactly the intricacies behind the scenes are, but what I will say is that anybody can build anything they want within reason. All you need is to open up your imagination and just go, and you'll figure it out. This was a shell of itself. I have redone it probably 15 or 20 times because every time I sit down and I run something, I think of something else that I want.
Yeah.
And the greatest thing, I'm going to give everybody a free secret right now. I don't know how much of a secret it is anymore, but free tip. Claude, my opinion, the best for building stuff. I have all of them. To me, it's the best. You keep Claude Code open in the platform, and then you keep Claude Chatbot open in the web browser. And you have them talk back and forth. You keep copy and pasting, and you ask Claude Chat, well, what do you think about this? And you have it be basically your assistant / your researcher, and you have it build the prompts for you, and then you just copy and paste the prompts into Claude Code. And then I have Claude Code, I'll do audits, and I'll do this, and I'll send it back what it says to Claude Chatbot, and we'll have a conversation about it. I must have refined this thing. I've rebuilt it 15, 20 times. Refining, I've probably refined it 200 times. And I built so many things in on the back end. Now, keep in mind, I'm spending money on this. It's not like I'm just paying for the $20 a month program. I have the big enterprise platform. I'm paying for real good APIs coming in with the data. I'm spending money on this. And I have the Anthropic API that's outside of the enterprise plan hooked in as the reasoning brain behind it with Python adjacent. So I'm super impressed. And I think that companies and I'm going to bring it full circle with SaaS, I think companies will figure out a way to utilize Claude Code or even OpenAI's coding or whatever, AI coding to create better ways to automate their workflows and make themselves more efficient on day-to-day tasks.
Yeah.
I don't believe they're going to vibe code an enterprise level software platform. I think that they're just going to figure out ways to make themselves more efficient. And it's incredible for that.
All right. That is it for us, folks. First episode, me and Steve going back and forth. Let us know in the chat and the comments if you enjoyed it. We will still continue to have guests, but hopefully this is a cool way to recap the news every single week, and we will keep it going. Last quick thing. What are you looking forward to next week?
Next week. Tesla reports next week, right?
Tesla reports next week. We're going to have a lot to cover with earnings. I'm looking forward to that. I'm also looking forward to see, can we keep the run going?
Did you see what
It's been a nice 2 weeks, but can we crack 7,000 and actually keep it sustaining?
Did you see what Goldman's CEO said on Monday?
What did he say?
That he thought the SaaS apocalypse was overdone.
There you go. I think a lot of people will start.
I'm interested in earnings calls.
Yeah.
More importantly, let's see what the Fed says the following week, and let's see what we start hearing out of the Mag 7 or Spectacular 6.
All right. Thank you, everybody, for listening to Basis Points.
Thank
We
you
will
very
catch
much.
you next week.